Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to be going over the Coinbase IPO, which isn't actually an IPO, but we're going to get into that later. If you guys are new to the channel and you want to see more content like this, please subscribe to the channel down below and turn on post notifications. But the number one thing you can do for me is like the video. If you like the video, it actually shows this content to other people who are interested in this type of stuff, so we can build this community here on YouTube and get financially educated. I'm really excited to make this one today, so make sure you guys stick around to the end of the video. Bitcoin recently broke $60,000 in price, and it might be on its way to $100,000. And Coinbase IPO is a great way to get involved with cryptocurrency if you are not already an owner of crypto assets yourself. Maybe you're on the fence with crypto assets. Maybe you want to invest in a company on the stock market. Maybe you're not used to buying crypto. Well, Coinbase is your answer to that, because Coinbase will be directly correlated to the price action of Bitcoin. So stick around and let's get right into the video. Alright, so here's Coinbase Global Incorporated, and they just filed their S1 with the SEC, and right off the bat, I noticed this is hilarious. They added Satoshi Nakamoto's Bitcoin address to their copies to section on this, which is hilarious because no one even knows who Satoshi Nakamoto is. But like, is this like an Easter egg? Are we getting like a clue? Is Satoshi the founder of Coinbase? Who knows, but you know, this is kind of cool to see right here. So I just did a bunch of research on this IPO, so I've got all this information consolidated right here into this Word document. If you want, I can upload these, but I'm not sure if I want to do that yet. But we're going to go over all this information in this video anyway, so I'm super excited. The first thing we should look at right here is that it's going to go public via a direct listing rather than a traditional public offering. Now this is an important feature because they're not the same thing, but we're going to get into that later, so make sure you stick around for that. The company has $90 billion in assets on its platform and $156 billion in lifetime trading volume. That's right, there's been $456 billion in trading of cryptocurrency on their platform, which is huge because that's how they make their revenue. The transactions of cryptocurrency is exactly how they make the revenue, by charging a fee. So the company is actually going to be profitable when they go public, which is the first time ever this year. They have been operating at a loss in the previous years. In 2020 alone, their user base rose 34% to 43 million users, while monthly transactions rose 180% to 2.8 million. The company will be listed on the Nasdaq under the ticker symbol COIN, and it's going to be within the next month or two. There is no confirmed IPO date, direct listing date as of yet, but it will be coming very soon, and that's why I'm making this video, so you can be as informed as possible before this IPO, so you can know if you were going to be investing in this company. So the most important thing to know about this offering is that Coinbase is going to be going public via a direct listing, and there's a few differences between a direct listing and IPO, so we're going to go over that right now. So a direct listing is where private investors in the company directly list their shares on a public exchange. So there's no underwriters. The private shareholders are directly going to be putting their shares on the exchange to sell to the public. Benefits of the direct listing include no share dilution, no new shares will be created. So all the shares that are going to be going public, they already exist privately. So there's going to be no underwriting fees. This is awesome because a traditional IPO, there's going to be underwriters, which are usually banks or corporate entities that list your stock on the exchange, and they usually take a cut, which is around 5% of the offering. So that is very costly. So it's very good because they're completely bypassing that loss to the underwriter. So another advantage to private investors is that there's no lockup period. They can immediately offload their shares rather than having to wait like they would have to in a traditional public offering. Alright, so we're going to go over an IPO just so you guys can know what the differences are. So in a traditional IPO, they issue new shares to the public, so it creates some share dilution, and what that does is it raises capital for the company that they can reinvest into their company and hopefully grow in the future. Traditional IPOs involve an intermediary, which is an underwriter who will bring the company public, and typically underwriters charge a fee of 3 to 7%, which can be costly. So now that we know that Coinbase is going public via direct listing rather than a traditional IPO, we need to ask ourselves, why are they doing this? Is there a reason? And I've looked into this, and I think there's definitely a reason that they're doing this. So the first reason is that cryptocurrency has gone on a revolutionary rise in the past year. We've seen Bitcoin hit $60,000 a coin, over $1 trillion in market cap. This is huge for cryptocurrency. We've never seen anything like this before, and this is most likely the reason why they're going public this year. Another reason is that the assets on their balance sheet have increased substantially in value. They've gone up with the rise of Bitcoin and other cryptocurrencies. They have stakes in Bitcoin, Ethereum, and other cryptocurrencies on their balance sheet, which is absolutely huge and has caused enormous growth of Coinbase in the last year. So Coinbase has actually held Bitcoin on their balance sheet since 2012. And in 2012, Bitcoin was $12.56 a share by the end of it, and now trades at over $60,000. So Bitcoin has increased to substantially higher levels than it was in 2012. As you can see, $12 to $60,000, that is absolutely incredible, and Coinbase's valuation has gone up with that. They currently hold $230 million in Bitcoin and $53 million in Ethereum on their balance sheet. Now, this is why I think they're going public via direct listing. So as we know, direct listings, private investors can offload their shares to the public. So with crypto being at an all-time high, and let's just take a look at the Bitcoin chart right now. Alright, so here is the Bitcoin to USD price right now, and it is absolutely insane looking at this chart. It literally only goes up. It has not had a negative month in, since like middle of 2020, and this is absolutely insane. A chart like this is absolutely insane. If this were a stock, I would never recommend investing at these levels. This thing looks like it's prone to a huge correction, but you know, it can keep going up. It could hit 100,000 before we see that. It can hit 200,000. We don't know. So I'm not going to make any financial advice right now. I'm not a financial advisor. Please don't sue me. But looking at this chart, this thing's at an all-time high, and with that, Coinbase's price is at an all-time high. So these private investors are definitely going to want to take some of that cut of that in order to basically cash in on their investment. It makes sense. With Bitcoin being this high, they want some of that money. Alright, so now we're going to talk about the valuation of the IPO, and we're going to let you guys know if we think that this is a good valuation for the company. So based on a private trading of shares, the current valuation is $100 billion, which would put it at roughly $350 a share. And this is the most recent data as of February, so this is the most up-to-date valuation of the company, which is at $100 billion. Now, what's very interesting is that in 2018, private investments in the company valued Coinbase at around $8 billion, so has grown over 10 times in the span of 2 years in valuation before being listed directly to the public. Now, this is what I find very interesting. I found an article, which is actually in the sourced info down below, and in July 2020, I read a fundamental analysis of this company where they valued it at $15 billion. So just to look at that right now, let's take a look at the price of Bitcoin in July 2020. So right here we can see that Bitcoin in July of 2020 was valued at $10,000 a Bitcoin. So that can explain why it was substantially less valued back then at $15 billion for the company rather than the $100 billion we are seeing right now. And like I've been saying, the current valuation is most likely due to the surge of crypto and other hot IPO markets that are going on right now. In 2020, the Nasdaq reached a new high of IPOs and money raised. Now that is 316 IPOs that raised $80 billion in capital, which is huge. Now in 2020, the number of SPACs more than quadrupled from the year prior. Now this is something to take into account. Why are all these companies making IPOs right now, opposed to in 2019, opposed to in 2018. Well, the market is currently trading at an all-time high. There's a plethora of new investors in the market, and companies really think they can raise the most capital now opposed to maybe in a year from now. Trust me when I say this, there's a reason they're IPOing way more now than they did in the past. And that reason is because valuations are very high and they can raise a lot more money right now. So last but not least, we are going to be going over the risks involved in buying this company. So I actually got all this information directly from the SEC filing. You can look it up yourself, but this is what the company itself listed as their risk to buying this company. And this is what I've been reiterating throughout the entire video, is that operating results have and will significantly fluctuate due to the highly volatile nature of crypto. Bitcoin is known to decrease in value over 75% of its value. So from 60,000 to 15,000 at any given time. And this will significantly correlate with the value of Coinbase. So this is something you need to be paying attention to. You need to be paying attention to Bitcoin's price if you are going to be investing in Coinbase. The revenue is also highly dependent on the price of Bitcoin and the amount of transactions that are happening. So they make money off of transactions. When Bitcoin is high in price, there's substantially more volume, which is just supply and demand. When demand is up, Coinbase makes more money. There's way more demand when the price is high. So this is why Coinbase makes money when Bitcoin is at $60,000 a coin opposed to $10 billion a coin. And this is why their valuation is at $100 billion. They're trying to raise as much value as possible while Bitcoin is at an all-time high. So if crypto does not continue its path of growing and it dies out in the public eye, and I think this is very likely situation, especially with things opening up, people not spending as much time on their computers, you might see a decline in price of Bitcoin. I can't say it's going to stay at $60,000 forever. I know there's a lot of crypto bulls that do, but honestly, no one really knows where this is going. Some people are going to say $100,000. Some people are going to say $1 million. Personally, I do own cryptocurrency and I'm holding it for over 10-20 years, so I don't really care if it goes down to 15,000 or goes up to 100,000. All I care about is that I have crypto assets for the long term, and I think that's how everyone should look at it. And you should consistently buy in at the average price, because you don't know where Bitcoin's going to go, and Bitcoin has significantly outperformed the S&P 500 over the last 10 years, so there's a chance that it can keep going up, but we just don't know that. And you should not put more money than you are comfortable losing in something like Bitcoin or even Coinbase, because it is a very, very risky asset, both of them. So this is a very interesting one, and it's that they're competing against a bunch of other platforms. So the first one that might come to your head is Gemini. That's another American-run exchange, but what's cool is they said decentralized and non-custodial platforms. So they can be competing by a decentralized platform, a platform that is on the blockchain itself to trade these cryptocurrencies. So that's very interesting, because people who like cryptocurrency, they love decentralization. Coinbase is a centralized business that's controlling all this cryptocurrency. There's a good chance that people that are holding cryptocurrency are not going to trust a centralized exchange like Coinbase. So that's a huge risk. They're also competing with people like Gemini, BlockFi, Binance, Kraken. There's a bunch of different exchanges where you can buy crypto, and it's not limited. And then the final risk is that they're subject to an extensive and highly evolving regulatory landscape. So this actually happened in 2020. XRP, which is run by the company Ripple, was actually removed from Coinbase, and Ripple saw a huge decrease in price. So the SEC or any government agency that is threatened by cryptocurrency can come in at any moment and be like, hey, trading Bitcoin is illegal. The likeliness of that happening, I don't know. I don't think it's very high, but they can come in and step in and say, hey, cryptocurrency, no more. So the government has huge influence on crypto and what can happen to crypto in the future. So that is always something to look out for, and that's a huge risk of buying this company. And then another risk I'm going to say is just the fact that Bitcoin's at an all-time high. This is going to be valued at an all-time high when it's being listed to you guys. So don't think you're getting any deal. If anything, you're paying a premium for this company. and you should be thinking long way out, because it may not be worth $100 billion in a year from now. It may be worth $200 billion in a year from now. We don't know, and it really depends on where crypto is going. So it's a huge risk that this is going at an all-time high when it's being directly listed to the public. Alright, so now I'm going to take a look at some of its financial statements to basically digest what is going on with this company. So as you can see, the revenue has increased by about double from 2019 to 2020. That's to be expected with the rise of crypto. And this is also interesting because their operating expenses have not grown at the same pace that their revenue has, which can either mean that they have their operations down pat, they already know what they're doing, they've been doing this since 2012 and they can do it, or it means they're not heavily investing in their company, which can also be kind of nervous. I personally, with these growth companies, I like to see them invest more in their operations, but it doesn't always happen. So this is huge. Their net income went from a loss right here in 2019 to a huge profit. Now, I think this is going to be correlated to the price of Bitcoin and the volume of Bitcoin. So if Bitcoin goes down and it goes back to like maybe $15,000-$20,000 a coin, their revenue, their net income can probably go down a lot. So this is very important to look out for. I wish I had more data here because in 2017, crypto also had a huge run. So I'd like to compare basically their net income from 2016 to 2017, but they don't have that listed here. This is on the SEC S1 filing. So this is basically the most recent version of their balance sheet and income statement. Alright, so here is their consolidated balance sheet. So this is going to be the last financial state we go over, and as you can see, they have increased their total current assets from around 2 billion to 5 billion. Now, keep in mind this is unaudited as they were a private company, so these numbers may not be to GAAP standards, but we're just going to take a look at it just because why not? And as you can see, their total assets are similar to their total current assets. And the reason that these are very similar to the total current assets is because current assets are easily liquidated assets. And as you know, cryptocurrency can be easily liquidated. So this is actually a potential risk factor for the value of the company, because if these current assets are liquidated, and as you can see, most of their assets are in customer custodial funds. So this means that most of their assets are actually their customer base holding these crypto assets, and the customers, if cryptocurrency crashes, that can bring down this value a lot. So it's kind of scary that most of their assets are in current assets, but this is what you get when you're investing in a company like Coinbase. And as you can see here, under the liabilities, you can see custodial funds due to customer. So this is basically how much they owe their customers in money at any given point. So it is right here, and it's actually more money than how much they hold in assets. So if all their customers were to liquidate, they would actually be in the hole for a few $1 million. And then this is another cool thing that I've actually have not really seen before on a balance sheet, but they have the crypto assets held. So they currently have $316 million in crypto assets in Bitcoin, Ethereum, USD coin, and others. So that's a really cool thing to see on the balance sheet. And honestly, I was kind of expecting them to have a bit more than that, because they've been investing in it since like 2012, but it is what it is. They make their money mostly off the transactions and not holding the asset, so we're gonna let that slide. We're gonna look past that for now, but that is something to keep in mind. So that's all I got for you guys today. I hope you guys enjoyed the video. I hope you guys enjoyed my analysis of this company, and I hope it can inform you to make a good decision when buying this direct listing. Personally, what I'm going to be doing is I am not going to be buying this company right away. And the reason for this is that I actually have a substantial amount of money in cryptocurrency right now. So I have Bitcoin and Ethereum mostly, and I don't really need the extra exposure into the Coinbase IPO to be exposed to the cryptocurrency. So if you guys are interested in cryptocurrency, I think it's a better idea to actually get into this cryptocurrency itself rather than the Coinbase IPO, because the Coinbase IPO is not the same as Bitcoin, and like I said before, I think it's really a way for the private investors to offload their shares at a very high price. So I do think in the future this IPO price will be coming down a bit. But that being said, if you guys enjoy this and you've listened to what I've had to say and you want to still buy this IPO, go ahead. Don't sue me. I'm not a financial advisor. I'm not telling you to make this decision. I'm not personally making this decision. So this is on you. And all I am here for is to keep you guys educated. And if you do feel that you were educated, make sure you subscribe to the channel, turn on post notifications. And the number one thing you can do is like the video. If you've stuck around to this point and you have not yet invested in the stock market and you want to get into investing, you guys can use the link below to get 2 free stocks. Promo alert on WeBull, and they're actually valued up to $1,600 a stock, so that's really good. And maybe you can get some nice like Google stock, some nice Microsoft stock. You can sell it, buy the Coinbase IPO, do whatever you want, but sign up with the link below to get a WeBull account. And that's gonna be it for today. I hope you guys enjoyed the video and have a nice day. Peace.